Hello, everyone. Welcome back to another weekly watch list video. So this week coming up is a very important macro week. What does that mean? What does that mean? It's an important macro week. Taking a look at the economic calendar is everything this week. And we do not trade until we know what is coming up in the week. So you have to look at that economic calendar. And this week, we have a massive, massive event, and that's the FOMC. That is when the Fed is going to come out and tell everyone what they're raising their rates to. Now, that starts on Tuesday, and then it ends on Wednesday. And then at 2 o'clock, they come out and say what the rate will be. At 2:30 on Wednesday is when Powell has his news conference. This is when the market is going to go all over the place. We have seen massive, massive moves on a day like that. And on Tuesday, you have another inflation data with the PPI. I'm going to show you guys all that in a second on the screen. But I think it's really important to start this weekly watch list video out with managing your expectations and managing your risk in 2022. This has been a very difficult year to trade. So when you're trying to invest or trade in a bear market, it's preserving the capital. That's the most important part, because you're going to see wild swings and you don't want to get caught in those, dead cat bounces. So we've been seeing those all year. The market will, bounce up, look really good, and then it comes crashing back down. So it's been a very volatile year. Obviously, I'm sure everybody watching can understand that. So preserve your capital. If you're going to be trading, lock in those gains. Take the gains quick, scalp, and then move on. That's just, in my opinion, the best way to trade, especially this type of market. And while we see a lot of setups, not really making the move. So we'll see the move, and then it gets crashed back down. So you want to be scalping and taking those quick moves. So like I said, this week is a very big week for the economic calendar. And this is what we're looking at. So on Tuesday right here, in Germany, you have the CPI. So will that come in hotter than expected in Germany? And that's at 2 a.m. our time, Eastern Standard. That will affect our futures. So if Germany has CPI right here that is not good, that's going to, potentially, if you do trade futures, move the markets there. And then here in the US, we have PPI on Tuesday at 8:30. Retail sales in China. This is all really important stuff to know. But the key this week has got to be Wednesday. Wednesday is retail sales in the US at 8:30. That's a really important one. And then, obviously, like I said, the FOMC, their rate decision. And then at 2:30, Powell holds press conference. There's nothing more important than this right here. This is going to probably sound very hawkish, because the CPI was 8.6% on Friday, way above expectations. So everybody that thought that inflation peaked, right? You heard that a lot last month. Well, it obviously did not. Okay. So that's really not good. And I'm sure Powell, when he talks, is going to sound very hawkish. And the market is not going to like that. So what we just got to, wait and see what he says at 2:30. But if you're trading this, it's very risky to be trading during this time. So just keep that in mind. That's really important. I really want everyone to manage your risk. And this is the week to really dig down and do that. So right here, we have the earnings for the week. Not much. So if you're interested, these are the stocks that have earnings this week. And then we get to some things here on the SPY. So the way that I look at it, the way that I do my weekly watch list, the way that I prepare on the weekend is I go and I look at the charts. I look at the charts from a bigger time frame. I go to weeklies. I go to the daily chart. I like to see where my moving averages are on the daily chart, on the weekly chart. And, we start to map out these key levels that we're looking at on the SPY. So this is the SPY on the year right here. And where we closed, 389.80, was very close to the lowest close of the year. The lowest close of the year happened right over here back in May. So we're in the process right now of retesting these lows. So this is something that I have to show you guys because, excuse me, this is the stuff that we post in our Discord, on Twitter. I posted this last week, okay? June 4th. After consolidation periods, after previous bounces, we have tested lows all year. Now, history does not have to repeat itself, but it almost always does. That's why I post things like this, so that we can all be aware of the possibility. So what did we do here before last week? We were consolidating, and then we dropped, and we are where we are right now. But these are things that, using technical analysis, strictly technical analysis, that's how we figure out where we may go. So this is the SPY. You see here these boxes that I have. This is what I did on last week's weekly watch list video. The consolidation, and out of consolidation is almost always very big moves. So that's what we saw here. We broke down on Thursday. This is before CPI. So we broke out of this consolidation to the downside. And then on Friday, everyone knows CPI was hot. We broke down even further on heavy volume. You can see here, the last 3 trading days, the volume has ramped up, a lot of selling. This is institutional selling. This is not good. And that's why we're testing the lowest close of the year, which is what we were showing last week of the possibilities. Now, this is a very big move, especially in these 2 days. So do I expect us to go down and just crash through everything immediately? No, it's going to try to find out if this area where we bounced off of, this 20% correction zone, is going to hold up. So this is very, very important. At the time, we were saying this is most likely a temporary bottom. We're going to be retesting that to see if it was temporary or not. So coming into next week, after you see these breakdowns, sometimes you will get a bit of choppy trading because so much has happened already. It can continue. We saw some really bad days here in a row and here. But, after consolidation, you get these moves, and then it starts to consolidate again. We're just going to have to wait and see. A lot of people are going to be waiting for Wednesday for the FOMC. So this is on the SPY. We had said the same thing here on the Dow Jones Industrial. these white lines, and I posted the same thing on Twitter about these bounces of 8%, bounces of 8%, bounces of 8% each time has brought us back down, okay? This is just technical analysis. It's chart reading. It's just seeing what happened in the past and trying to predict the future. Nobody has a crystal ball. I don't care who you listen to. They will tell you why something happened after it happened. And they're almost always just making stuff up just to show you, oh, okay, this is why we went down. This is a technical breakdown. This has happened 2 other times this past year. So why would I think that it couldn't happen again? And that's why we show these things every single weekend, so that we're all aware of the possibilities. So that's exactly what happened here. 8% bounces. And, you know, these just didn't happen to be exactly 8% for no reason. You see bounces in bear markets like this all the time. You don't just go down in a straight line. There's bounces along the way, and then there's lower lows. Bounces along the way, and then there's lower lows. We get a bounce. Will we get the lower low? Well, we're going to have to test out this spot here. So, you know, keep in mind, going into next week, the odds are going to be pretty high that it's going to want to see how strong, if there's still demand down here. All right. So that's the Dow Jones Industrial. And then we go over to the Qs. The same thing, guys. Consolidation, consolidation, consolidation. And we see the breakdown. Prior lows of 281 here on the Qs. Now, I want to show you something that's really important, because we are kind of in what a lot of people will tell you, and it's pretty obvious that we are in a bubble, okay? So back in 2000, the year 2000, you hear a lot of people talk about the tech bubble. So this is QQQ back in 2000, and every stock was just so bloated. Valuations were crazy. Companies weren't making money. We had a bubble. So what did we do in this bubble? In 2 years after it bursted, we had lost 83% on the Qs. 83% on the NASDAQ. That is massive. Now, along the way, you see these bounces, okay? Bounces. And then drops. You get some bounces. This is the weekly. So right here, these 2 green bars, this is 2 weeks of a bounce, which looks good. And then it makes lower lows. 2 weeks of a bounce. And then lower lows. And then you get a little bit of a rally towards year end. And then it just kind of rolls over to making a low. So the point of this is not that we're going to lose 82% on the NASDAQ, but the point is, when you see the bounces, there's just no follow through, okay? So everybody just be aware of that. The weekly candle here is really, really ugly. So this is also about the worst close on the year. So right here, about 288.84. That's about the worst close on the year. And, you know, like I said, everything is setting up in the exact same way. Stocks that we want to look at, let's take a look at Apple. And I'm going to pull this up on the daily. These are the charts. This is what the overall markets look like, okay? You got the bounce up, and now we're retesting lows. So this particular stock right here was something that we posted last week, and I just want to share this with you. I post every Sunday my picks for the week. So last week, this is where we were trading with Apple, and I wrote the chart looks extremely weak. Could not hold through the 150 and saw a huge rejection with tech sell-off on Friday. Didn't show any divergence from the market and was actually weaker than the market. I would be taking this short, okay? This is something that I posted on Sunday, just so you guys can see, and this is where we went. Every chart is looking like it's about to retest bottoms, okay? So this is Apple. Do we break down further, or, do we see some demand, some buying come back in? This is anybody's guess, but the trades to take, we're back here on rejection for more shorts. I have Citibank right here. This is another one. And you can tell here, I still have an alert set. I set an alert about 2 weeks ago. If we broke this previous, so this is support, resistance, resistance. If we broke out of this, I wanted to get long. It never happened. It never triggered my alert. So I never got long this stock. This would have been a great place to short as well. Okay. What's previous support is now clear resistance. And the whole financial sector looks terrible. We could take a look at that. XLF just breaking down. Again, retesting lows. A lot of things are going to be retesting lows right now. XLV is a very interesting one to me. This has the potential of being a good spot to see a bounce. The healthcare index is usually decent, and it usually holds up a bit better than the overall market. Like, this does not look like the way that the market looks. It looks like it's trading in a range, and it looks extremely choppy. I mean, it's down for the year, but this does not look like the rest of the market that's just making lower lows. This at least has some support. Now, that being said, if this support breaks at 125, that could be a short opportunity. So this is at a key area right here. So keep XLV on watch. Another one that I noticed here is Starbucks. Now, Starbucks looked like it was starting to break out. It broke this down, this descending resistance trend line. Once it broke out, this was a good sign, and then it had trouble back here at previous support, okay? Some consolidation here. What we saw just could not break through, and then the overall market took the stock down. But this stock is hitting an ascending support trend line. This is not retesting lows down here. So this is showing a bit of bullish divergence. So keep an eye on this stock, okay? If it wants to bounce here, maybe we can get a move and finally break through resistance. The stock is trading at a lower PE. It's not expensive. These are the types of things that we want to try to find out. It's a stock picker type of year. So you're going to have to really get into these charts and look at this stuff. Now, Meta, we want to look at this on the weekly chart. This is hitting an ascending support trend line. All right. Now, normally I would not be getting long these tech stocks, but keep an eye on this area right here, because this is for, 1 year here, 2 years here, 3. This is, going into almost the 4th year. And this is a solid trend line. We saw the bounce here off COVID, and now we're getting that, potentially a bounce here. we'll see what happens. You know, it's still very risky to be investing any money. If you do, just manage the risk, because this market is very dangerous at the moment. And it's just taking people out left and right. So that's that. Let's see, what else did I have here? Apple, Starbucks. Yeah, so I think that's about it, guys. You know, just looking at this on the weekly chart, that's a bad weekly candle on the SPY, obviously. We're going to see lows possibly retested here. And then, you know, the 350 area where that 200 is on the weekly chart, if we break 381, there's a good possibility that we can see 350s. So manage risk. You know, just manage risk. We'll see what the Fed says on Wednesday and trade accordingly. So hit the thumbs up for the video. And if you're new, consider subscribing. We have new videos just about every day. Videos that hopefully are helping new traders with some technical analysis. That's the way that we trade in our Discord community. If you want a community like that to join, the link will be in the description as well. So that's it, guys. I'll see you back tomorrow with another one. Take care.